Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's hard to believe it's been a month since my first coronavirus update where I said we'll have to see how this plays out, but a lot has changed. The stock market has had a particularly rough time of it the past 2 days. I want to talk about how this is going to affect the broader Australian economy as well as what is going on in China. So as we can see across the board here in Australia, just about every sector is down today on our markets, apart from volatility is up and money is going into the safety of bonds, and I'm going to talk about all of that throughout this video as well. So this is going to have more of an economic focus rather than a medical focus. If you haven't watched the video I did where I put my pharmacist cap on and spoke about the medical side of this virus, everything I spoke about was pretty accurate really, so I recommend you watch that video first. But tonight we're going to talk about, should we be worried, because a lot has really changed in those past few weeks. All right, so for the most up-to-date information, you can keep an eye on the World Health Organization website, but even they have been getting a bit of bad feedback, and we don't know about the accuracy of all the numbers and how that's been reported. But what we do know is that this isn't a really nasty killer disease, but it's contagious and it's spreading, and it looks like we haven't contained it, and now that is going to affect global supply chains. The economy is going to slow down, and Australia is probably one of the economies that is going to be the hardest hit, and we're starting to read these articles now. So it's not only that, it was the bushfires. Australia's economy was already pretty fragile. I'm going to tie this together. If you haven't watched our documentary, that's got 220,000 views now. A lot of that, again, has come true. We predicted the Aussie dollar was going to fall. The RBA would have to cut interest rates. They're likely going to start to print money, which I think they are going to have to start doing soon. And all these puzzle pieces are falling together. I think we are heading into recession if this coronavirus continues in any way, shape, or form for a couple of months now. So it's not so much the confirmed cases in Australia that's the worry. We've only had 22 at this stage. It's all these other countries and how rapidly this week the number of cases has grown outside of China. So let alone, let's not even think about if Australia is actually hit really badly by this. And I have heard stories of some Chinese exchange students being told to tell their teachers that they weren't in affected areas, and they were. Their classmates dobbed them in, and now they're in quarantine. So, this is happening all across the world, and that's why it is very, very hard to contain. We've seen this week already stories that people can't get the parts, manufacturing is affected, and China does really produce so much these days, a lot that Australian businesses are reliant upon. I'm going to talk about all the different sectors and what are the ones that are going to probably hurt us most. We have seen the number of cases spike in Italy. They haven't been able to contain it. They've sort of tried to wall everyone off in Italy, but that free trade agreement there, or the citizens' rights directive as it's called, where the EU passport holders can really move freely, that is going to go into lockdown. And if it starts to affect Europe, that's when things can really slow down. So it's bad enough with China. We haven't seen too much happen in the US, but Europe right in the middle there, it's not nice to see the cases spiking in Italy. We've also seen Japan update their warning. We know they're a really powerful, strong economy. The US Embassy have raised their alerts, and they're worried about Indonesia now, one of the partners to Australia. Brazil may have their first reported case in South America. So there's just no doubt now that it is spreading, but it's China that is Australia's largest trading partner. So here you can see the total amount of trade we do with these different countries. China, Japan, South Korea has been really badly affected, and now we're hearing some of these other countries coming into the fold. In terms of our exports, again, China at the top of that list. They're taking all our commodities and imports as well. We are reliant on China and some of these other countries like Japan, Italy, Indonesia here. They're all on this list for us to get goods and services as well. So the next chart I want to show you here is how much Australia has grown. So when we look at China's increased integration into the global markets these days. Back in 2000, $250 billion. Now it's up towards $3 trillion there. The same with inland freight. So China have become an absolute superpower, responsible for so much of the growth. Here we can see the estimates that have come out about how it's going to affect China's GDP in different scenarios there. And some people are saying that this is only going to last a few more weeks. It's not going to be that bad. But if it really starts to work its way down supply chains, and remember, one little part can be the difference between having a product or not. And so everything stops as soon as you can't get one part. That's really important when we start to think about globalization. So China's top 10 exports to the rest of the world, a lot of electrical machinery, equipment, manufacturing, computers, and then we've got all our beds and furniture, plastics, vehicles, a lot of clothing. You guys know the story. In Australia, we pick up and everything has a label made in China these days. What is particularly worrying in the trade wars and where the friction can come into it and politics here is medical goods and drugs. So a lot of people are probably unaware that China is responsible for 95% of things like ibuprofen, hydrocortisone, penicillin, antibiotics. That's the really big one. So 80% of all antibiotics supplied to the US are made in China, and I'm sure that number is probably higher in Australia. And what happens if we get a shortage of these things? Of course, China are going to protect their own. They're going to stockpile and look after their own citizens. Now, in the pharmacy world, a lot of drugs are supplied through cold chain. Insulin, for example. Diabetics are dependent on that. Painkillers, psych meds. The number of people on antidepressants, antipsychotics, anti-anxiety drugs, it's enormous these days. The number of children in the US that are on ADHD medication. It really, the stats are mind-blowing when you actually look, and some of these numbers are now like 1 in 10. 40% of people have taken something for mental health at one stage. 50% of people take some medication. So we're really dependent. I'm not sure what the stockpiles are. Normally in the pharmacy, we'd have, a couple of months of the most common drugs. The warehouses can run out very quickly once people get a sniff that a product's going to run out. So if I know that insulin's going to run out, I'm going to order as much as I can and put as much in my fridge at my pharmacy as I can. Because I need to make money. I want to dispense those and get the dispensing fees. I don't want to have to tell my patients and the nursing homes I look after, the hospital doesn't want to say, hey, we haven't got that, go get it elsewhere. So it's financially for that business, but more importantly for the health of your patients. And so many people are dependent on these medications, and we forget how fragile that supply chain can be. So globalization is going to be something that is really spoken about, and people are going to realize how dependent we've become on countries like China that we're not necessarily that good of friends with when push comes to shove. And Australia's in a really interesting position in between the US as an ally and China as their greatest trading partner. I think we've got some tough decisions to make going forward. Now, Chinese authorities may add stimulus. They've been printing billions of dollars or trillions of yuan. We know that, to try and stimulate the economy, to shore up the banks. They've got all those bonds coming due, particularly junk debt, and they don't want the system to collapse on that front. But they're also talking about austerity. And hey, if things get bad, we're probably going to have to cut back a little bit. You're not going to get everything that you were. And that's a really interesting change in tone from the Chinese government there. So we are waiting to see what happens there. But any stimulus to try and get the economy going, that would be good for Australian exports in particular, but nothing's guaranteed. But the other parts of our economy that are more fragile than other countries around the world are education. So 100,000 uni students stuck in China, they can't get back to Sydney. Now that is just Sydney. When you have a look at the total number of international students at all levels, we're edging up towards 1 million people. Our population's only 25 million. Higher education, these people pay a lot of their fees up front, 400,000 for the uni degrees. They rent places out to stay, they eat food, buy clothes, go out and spend. It tends to be the wealthier families that can afford to send their children to Australia. Generally they are going to be more stimulatory students compared to a typical uni student, an Australian that's on a bit of a budget and whatnot. Some more figures around the total number of international students per population, and we see that, look, Australia just blows everyone else away. What are we, double or triple some of these huge nations like France and Germany that are economic superpowers? And even Germany had a GDP of 0 last quarter, and that's before all this hit. So yes, we've got some more news today, which we're going to get to in a sec about Australia, but look at the total revenue and how dependent we are from Chinese students there. So in the hundreds of millions of dollars, big percentage of all the states' revenue there. Now, tourism, again, wealthy families, that Chinese middle class, there's 1 billion people. We're now talking hundreds of millions of people that are in the middle class. They want to go to Australia, the lucky country. It's not crowded, beaches, sunshine, good food. And you just see, look at those number of people there. And we are so reliant, and that is taking a hit. So Australia wants to keep their borders open at the moment. And you can understand why, because our economy is fragile and the government have seen the numbers that we haven't seen. They know that if this tourism stops, we are very likely to go into recession. So while other countries are busy going into complete lockdowns, Australia is saying that we're going to welcome some students back. We don't think it's that bad. Our borders are open. As soon as we get a few cases of coronavirus, that changes really quickly. People can be pretty unhappy about that decision. Do we see civil unrest? All these things become possible very quickly. Now, the numbers out today, construction had a sharp fall in December. So construction work across Australia fell by 3%. Now, this has continued, these declines quarter after quarter. But remember, this is before the bushfires. This is when houses are rebounding rapidly, when people are spending supposedly over Christmas, before the coronavirus. So we've got some bad data starting to come out. When I know everyone's pinned their hopes and dreams on the fact that house prices are going to go up, everyone that owns a house is going to feel so rich, they're going to borrow more, they're going to put new couches, new TVs in their house. It's that wealth effect, and that's what the economics textbooks teach all our central bankers and economists, but it's simply not true. We know that Australians are under record amounts of debt. They haven't got any wage growth. They're smarter than what they're reading in the media. If they're not on the property ladder, they're getting further and further behind, which I've spoken about. They don't own a lot of shares other than their super. Now they're seeing these headlines about stocks falling. So they don't have confidence. The sentiment's not there. I'm sure Martin and I will dive into that more in next month's video. But Australian property rebounding sharply, even if that is the go-to. If the RBA cut interest rates 2 more times, if they start printing money, if stocks go into this fake world of just going higher and higher and property goes up, that's still actually not a good thing for the majority of Australians that don't own a lot of those assets. So we need more than just that economic stimulus. We need we need more economic stimulus rather than this balanced budget. We know the government are obsessed with their surplus. They've started to back away from that a little bit recently. I definitely don't think it's that palatable to say, yay, we got our surplus, when we've had these devastating fires and they were pretty slow to come to the aid in a lot of ways. And now they're sort of tiptoeing around this issue and pretending it's not that bad, where other countries are taking this far more seriously. I definitely think that Philip Lowe has made it pretty clear that he wants the government to do more fiscal stimulus. He's sort of running out of tools. He doesn't want to go to negative interest rates. Apparently, I think he will if the rest of the world does that. But I actually think we're probably going to go down that path of modern monetary theory, and they're going to start to print big. And this is exactly the news that we got today. So this is helicopter money. You might have heard this called in the past. We did trial this in Australia, where you might have got $1,000 back in 2008. I remember getting that as a uni student. But Hong Kong, they've had the civil unrest, the riots, the issues with China. We know that their retail sales plunged as soon as that civil unrest started. And they're going to try it. They're going to hand out 10,000 Hong Kong dollars, $139 billion stimulus package to every adult in Hong Kong. This is probably one of the most bullish things you could possibly hope for Bitcoin and gold, and money printing low interest rates. We know that drives it. It debases your local currency in the hope that people are going to stimulate it. but it reduces the purchasing power of anyone that has saved money, and Bitcoin becomes more scarce. Gold is finite in supply. I know at the moment everything is dropping, and we're going to talk about markets in just a second, but this is amazing news. And if any other countries start to try this, this is a gear up again from QE in terms of monetary policy. So last week I did that video about the global asset bubble and how the world has gone mad. I spoke about how I just think that it was insane that stocks were at record highs in Australia and the US. People were ignoring the coronavirus, and sure enough, the rubber has hit the road a couple of days later, as I like to say. Now, what makes this correction interesting is that everyone was so bullish. And when we look at things like the traders and where they have their options, everyone was a buyer. People weren't buying those options, those puts, as downside protection or insurance in case stocks fall. So people, it's almost like in the crypto world when everyone's long and then we can get this long squeeze, or when everyone's short and we get a short squeeze. When everyone's on the wrong side of a big move, they're trapped in these positions on margin or on derivatives. And we know how many derivatives are out there. So I think central banks are going to do crazy things to try and get the stock prices back up. If coronavirus continues to get worse, the numbers get worse, markets continue to sell off. The Fed are talking about withdrawing that liquidity, reducing their repo market operations, which is nuts to think about that, trying to take away the punch bowl now that stocks are correcting. And again, I don't think it's a coincidence that we've had this bigger correction all of a sudden as soon as they reduced their repo operations. I think I literally said in last week's video that I think we're going to have a red week as soon as they take away that money, that punch bowl. So we know that people's cash holdings were at record lows. They've pushed all their chips into the stock market. We know that they're looking for yield as well. A lot of money had already gone into the bond market, the smart money. So when we read headlines like this, the Dow's down 1,000 points 2 days in a row on these sort of fears. Market manipulation, we saw Warren Buffett rolled out, Charlie Munger, Donald Trump comes out and says the stock market's looking very good to me. This is laughable with SEC. If someone did this in the stock market world, or Elon at Tesla or whatnot, they're going to get in trouble. But probably the most powerful man in the world, Donald Trump, is allowed to do it. And this is probably something that really makes my blood boil when we're going to hear about we need to print so much money to save everyone. That is going to be the narrative from central banks and governments, whether it's modern monetary theory or it's QE on steroids, or it's now this helicopter money where they're just going to give everyone $10,000. So Warren Buffett and Jamie Dimon telling everyone that Bitcoin's good for nothing, it doesn't do anything, you can't send it, or absolute nuts that they don't even understand it. But anyway, this is a story from Lebanon overnight. They've got these capital controls in place. They're being told that they're getting their money, but they're using what they think is the fair exchange rate, which is actually 40% worse off for the citizens than the actual exchange rate if they go and try and change to another currency or spend their money or whatnot. So they're being told, yep, here's your $100. This is the equivalent amount. Actually, they've just found out that they've lost 40% of their savings overnight. Anyone that's been in Bitcoin, Bitcoin's starting to be mentioned in mainstream articles. This has saved their family, their life savings 40%. So very powerful stuff. Absolute crap when we hear that Bitcoin is not good. And that's exactly what it's for, protecting from these situations. Now, money is rotating into bonds. It's looking for a home. If you've made all that money in the stock market, you sell, you go into bonds, you try and get your 1 or 2% yield in the US where you can still get it. But also people seeking those higher risk yields in junk bonds, as we know. So going out the risk curve, trying to get a slightly higher yield, but markets were diverging. So normally when people sell out of stocks into bonds, well, stocks go down because people have sold. But there's so much liquidity and fake money being pumped into the system that even all the selling that pushed bonds up, stocks were kept afloat. So they finally might be diverging now, and we do see bond yields at record lows, which we'll get to in just a sec. But this was Bitcoin's first real global event, black swan type test. So Bitcoin's gone down, 2-3% yesterday and today. But if you look at it, it's actually gone down less than a lot of the world's stock markets. So I wouldn't say that Bitcoin is sort of crashing. We know that Bitcoin's had a good run recently. Gold's had a tremendous run. Even gold's pulled back a little bit the past day or two. So one of the things that I've said very clearly was that in a liquidity event, a genuine crash, when everything sells off together, just like in 2008, the financial crisis, gold sold off initially. But then investors think about, well, what's the cause? What is going to be the central bank response here? And we know we've just had a preview that they're going to print lots of money, hand out money, and ultimately, medium to long term, I think that's really good for Bitcoin and gold. So yes, it's probably acting actually uncorrelated to anything. So it hasn't reacted badly, but it hasn't reacted really positively either. It's gone up one day, down the next. So it's showing that it truly is uncorrelated, which is probably a good thing. Now, all these charts that we're about to look at, just a reminder that they are tradable in Australia on eToro on their app. This is the last week where you can get your $100 free Bitcoin if you sign up with that link below. So something like the high yield bond index, if you think these businesses aren't going to be able to pay back their debt, these businesses were already struggling, and now we might be heading into recession. That's where you can short something like the high yield bonds or the junk bond index. See, these two are down today. We look at something like a product, TLT's US Treasury bond index. See, that's up today. With people rotating their money into bonds. So when we look at that on a chart, let's have a look at the US 30-year Treasury yield. It's down to 1.8%. So that's all you're going to get for lending the US government money for 30 years. This is a all-time low. So weekly chart, let's go out again to a monthly chart. A few years ago, you'd be able to get 10% risk-free just by borrowing or lending money to the government or putting it in a savings account. So now that risk-free rate is down to, wow, we're just ticking under 1.8%. So all that money is going into bonds. So if we have a look at TLT, like we just described there, I think TBT is the 30-year bond. So you'll see that that's the inverse, sorry there. So TLT, let's bring that back up. So this is the actual price of bonds, and we can see that it is going up because people want to buy those bonds. Again, if you don't understand the price of bonds and the yields and the interest rates, watch this video about negative interest rate bonds and the war on cash, how they're going to force us into that banking system. So finally, let's just have a look at the stock market. It is pulling back quite sharply here. We don't know how this week's going to finish yet, but when we have a look at this inverse head and shoulders that I had drawn on the charts for a long time, we did get the breakout to the upside, and now we're forming a pretty nasty looking candle there. So gold still holding around 1250 after its recent breakout. Silver's shown a bit of strength as well. Bitcoin, in the scheme of things, this isn't too bad still. Let's just go down a little bit. This can still be a bull flag. Really, I really think a lot of people aren't too fazed by what's happening in the markets at this stage. If it turns into a complete market meltdown and financial crisis, then yes, possibly everything will sell off. But man, oh man, if you've been smart with your money and you've been rotating out of stocks, you've been patient, you're a dollar cost averager, maybe you've been shorting on the way down, you've learnt how to short something like the stock market. And if you think it's going to go down, you can bring up the S&P 500 in the US. The QQQs is the NASDAQ, the tech stocks down 3% today. So these are why I talk about it being lifelong skills, knowing how to rotate from one asset class to another. How is the smart money thinking? Do you know how to protect your wealth? What is going to happen in Australia? Let's just finally have a look at the Australian index, the XJO. After breaking out to record highs, that's not a pretty picture at this stage, but look, this can all change really quickly. We don't just want to say that it's a given that we're going to enter a recession. There's going to be this big financial crisis. If this number does slow down and taper off, we get it under control, and we stop seeing these big breakouts and explosions in other countries. Look, if that all happens, then so be it. I think markets are going to turn around. Central banks are probably going to have an excuse to print more money and tell us that they need easy conditions. But if this continues to trickle up and up each day, a few thousand cases here and there, another big outbreak in one country, Europe starts to shut down. We've already seen the side effects of what's happening in Australia with tourism, education, as well as manufacturing, and now construction is getting hit. I'm really looking forward to seeing what you guys tell me in the comments below that you've noticed. Don't care what industry you're in, whether it's retail, manufacturing, supply chain. Let's get the conversation going. Tell me what you've heard down in the comments below. Don't forget, if you want any of our free resources, that resource hub is now up and running on our website. And if you do want to join our group for my daily insights and the charts and tying that macro picture all together with my outlook on Bitcoin, gold, and all my favorite cryptocurrencies, head over to that link down below. So I hope you guys have enjoyed this style of video, tying it all together. Please smash that like button, subscribe if you haven't already, share this video around, and I will talk to you again soon. Cheers.